All right, everyone, welcome back for another episode of Carnivore Trades. Today is Wednesday, November 10th, 2021. So it is official, Evergrande has defaulted, and obviously markets taking it on the chin just a little bit here today. Volatility having a nice day, as you can see there on the screen. QQQ getting hit the hardest, down 1.5%, S&P down 0.8%, Dow down 0.5% there. And obviously yields spiking intraday. That is putting pressure on tech. See that large spike there? And somebody obviously knew something. You can't tell me that there wasn't. If we take a look on the intraday again here on yields, it was really bidding, gapped higher and bid all day long. And then this is where the news of Evergrande was released. So, I mean, maybe somebody just has amazing timing and, was just really lucky and just knew to just buy all day. But yeah, so clearly somebody knew what was going on beforehand, but in any case, Evergrande has officially defaulted. Let's take a look at the dollar. So dollar hitting 52-week highs, and you guys know I've been bullish dollar since really March, and I've been talking about this for quite a while, and we've had this little inside bar here on the weekly, and it is playing out. So dollar getting a pop. I've been talking about this bullish pattern here for the last 5 weeks now, as long as we've had it, and I've said we're probably going to get through this resistance. Now, we have done that. The dollar did close above the resistance here at 94.70. But we have to wait and see, and it closed above the 200 moving average too, but we'll have to wait and see what it does on Friday. So bond market is closed tomorrow, stock market is open, but if it can hold this this close by Friday, then that would probably be a breakout for the dollar. If it gets pushed back down, then it may have to do a little bit more backing and filling, but still I think that, again, the dollar's poised to move higher, and I've been talking about that for a while, and that looks like that will be the case. So let's take a look at the daily time frame here on the SPY. We talked about this trend line here going back to last year, and I said that's probably going to offer some resistance, and it did. We got into this risk zone up here, and now we're pulling back. We'll see if we hold this. So we're getting a bit of a bounce here intraday. We've got about 40 minutes left. We'll see if they hold this lower trend line by the close. That would actually be key in determining where we will open tomorrow. And then triple Qs, same thing. I've been talking about this trend line as well. We got right up into that and now pulling back off of that. So Qs taking it a little bit harder than the S&P and the other markets, obviously due to the higher yield, but essentially the technicals are playing out pretty much perfectly here. Let's take a look at some stocks here. AMD, so I've been talking about these stocks here: AMD, Nvidia, Tesla. A lot of these things have just been overbought here, and they're coming back in, and that's what happens when the trade gets too one-sided. Everybody piles in and gets FOMO. Look at the gap up yesterday on Nvidia. Look at the gap up on AMD. So those things coming in very sharply, as they should. No surprise there. Facebook getting hit a little bit as well. Apple down almost 2% there. Netflix getting hit. Little inside bar there. Netflix down 1.7% right now. Palantir getting hit pretty hard as well. Was down almost 7% here. And remember, a few months ago, I talked about this. Possible inverse head, possible inverse head and shoulders. It triggered, and then once it failed, I said, hey, this thing's probably going to go lower. And if we look on the weekly time frame, we got a nice inside bar, and that is playing out. But you will have some support in this range around 22, maybe a little bit lower than that. So Palantir getting hit as well, but these tech stocks are not going to perform well if yields are continuing higher. I'm also seeing a few signals. So Dow Transport's down pretty nicely as well. Broker dealers getting hit. Down 0.5%, and the semiconductors are also down almost 3%. So we're seeing confirming sell here from some of the leading indicators in the market. I do think there's a little bit more downside. Your major support here on the Qs is 383. You have this little middle trend line here and the 20 moving average. And on the SPY, you're going to have support at the 20 MA. You got this little chop here, and this 454, which is your previous all-time high. So you'll have support in this range. We could get a bounce there, and the big question is, do we get a bounce here and then does it take off again, or do we bounce and then make a lower high and then sell off? So that's really going to be what we're going to have to look for moving forward. But for right now, we'll not make too much out of it. We knew that Evergrande was going to default, so a lot of that is probably priced in, but markets were just overbought, and so we'll just kind of leave it at that. Financials, one thing of note, financials are holding up well. JP Morgan's actually bidding pretty decently. XLF is positive on the day, so financials are doing okay. Goldman is down, Morgan Stanley is down. Investment banks not doing as well as the money center banks. Bank of America there, you see up a percent. So financials are holding up, which is a good sign for the market. If everything was down, we had a broad-based sell-off, and financials were selling, then I would say that there's some serious problems in the market with the higher yield. But so far financials are holding up, which is usually a good sign. Let's talk about energy. So nat gas is through that head and shoulders trigger. So it is triggered. It just closed below that neckline. Now it did come off the lows, so this could be a trap. It does feel kind of trappy. For this to really for this pattern to really be valid, you need to see follow through tomorrow. It needs to get hit really hard tomorrow. But if it closes back above this neckline, it probably goes a lot higher. So watch out for that. There could be a bear trap in play here on nat gas. So just want to point that out. On the other side, crude did reverse all of yesterday's gains. So crude got hit pretty hard. Looked like it wanted to go retest those highs and just came right back off of that 85 handle and closed lower. Same thing with XLE. XLE got dumped pretty hard today, down 2.5%. XOP down 4.5%, and the OIH down 5%. So oil services and the energy sector getting hit pretty hard here as crude gets hit. And usually crude has been trading higher with the higher yield, but not today. So something we'll have to watch for. Lastly, we've got to talk about gold, obviously. So gold got through this resistance at 1840. Just blasted right through it, got right up to this target I talked about, 1860 to 1880 for a couple of weeks now, and it got there in one day. So gold having a big day. GDX up 1.5 there. SILJ gapped higher this morning as well, up 1.3. They did come off the highs a little bit here. Silver did try to trigger an inverse head and shoulders. It got up there, and it does not look like, actually the commodities are now closed, but yeah, so it did not close above this neckline, but we'll continue to watch that. It can wick through it and still be valid, but it has to close above this neckline in order for it to trigger. But as of right now, and this is why you don't chase, because there was a lot of people who chased and tried to buy it up here thinking that it was going to be a breakout, and then they just got faded. So we'll probably look for pattern here. If it goes sideways, then you can buy it, and consolidates a little bit. Then it's safe to buy, but you don't want to buy the breakout because that's how you get trapped. Same kind of thing with nat gas we're talking about. You don't want to short here because they could easily trap you and then rip this thing higher. So just wanted to point that out there. Anyways, without getting too long-winded here, I'll let you guys go. Take care, and I will talk to you guys tomorrow.